In this video, hi viewers, in this video I'm going to solve this question. This is about control accounts. Before I start this question, I would suggest you to watch my previous video, which is only on control accounts. I've explained how the control accounts work. Because if you watch this video, there are some transactions which you may not understand. So it's important to watch that video before you look into this question, which is Jessica Parker. Now, in my previous video, as I mentioned, that the total of control accounts balances should be matching with the total of individual debtor balances or list of debtors. But you can see that in this company, the balances are not matching. And if they are not matching, that means we need to go through all these errors, which are stated in the bullet points, fix those errors and reconcile, and making sure that at the end, both the control account balances and the individual account balances are matching. So you can see that this balance is not matching with this balance, and creditor's control account balance is not matching with the creditor ledger. So what I'm going to do is record these balances into my T accounts at the bottom. So I already have them ready. So debtor ledger control account, brought down balance, I'm going to record 30434, and the creditor ledger control account balance brought down is 34640. And then the individual balances. Now you can see that in my previous video I showed you that individual balances will be appearing as a list of balances. So rather than having 5 different suppliers, what I can do is merge them all in one T account. And call it debtor's ledger. And similarly, this will be creditor's ledger. And from the top of the question, you can see that the opening balance, which is different from the control account, is 28,040, and the total of creditors balance, brought down balance, is 26398. Now here is the question, full question. I'm going to zoom it so you can take a good picture of this question and keep it in your mobile so you can just follow it easily rather than scrolling the page up and down. But I will be scrolling it because I want to highlight the transactions or the errors. Then the first transaction is it is telling me that the whole page of January 2007 purchase invoices totaling 5,900 correctly recorded in the day book had not been posted to the individual ledgers. So whenever you're doing this question, you need to think that you are a manager who is fixing the problems of a junior accountant or a trainee accountant who has done these mistakes. So make sure you do not repeat that mistake. In fact, you find a solution. So in this transaction, I have been told that 5,900 has been recorded in the day books, correctly recorded in the day books, but it had not been recorded in the individual ledgers. So it tells me that daybook is okay, and the total of the daybook, I know that it goes into the control account. So this is okay. The problem is in the individual accounts. Now, let's read that transaction again. It says the whole page of January in the purchase invoices. That's the important part. That is the most important part. Purchase invoices. That means I am not looking at the sales day book. I'm looking at the purchase day book. So rather than looking at the debtors control account, I should be looking at the creditor ledger control account. So the question is telling me that the creditor ledger control account is okay, but this is not okay. So that means I need to record it in the individual accounts, and that is 5,900. And because my accountant forgot to record it, I will write omission. It's an error of omission. So that's recorded. So make sure you read the transaction clearly, making sure that you're updating the relevant account. Transaction number 2 is a check from a sum of 2,566 from Lexi Limited in settlement of the 2 outstanding invoices was dishonored by Lexi Banker on 27th of February 2007. This was correctly reflected in the ledger accounts of Lexi, means the individual accounts are okay, but no entries were made. That means the control account is not okay. It's missing. The figure is missing, and the amount is 2,566. Dishonored check. So if I go down, I'm told that this is okay, but this is not okay. So I need to simply record it here. And that is 2,566. Dishonored check. So I need to record it back again on the debit side because I still have to collect this money. Now remember, Jessica Parker is a travel shop, so she's like a travel agent, and she buys tickets and give it to business clients. So she is not an airline herself. She's just a travel agent. She will buy the ticket from the airline and give it to the customers. Number 3, the Hicks Partnership, a client of Jessica Parker, paid their account twice in error. Well, Hicks has paid me twice. So what we need to do is we need to give that money back to Hicks. And how much is that? 500. This repayment was posted from the cash book to discount allowed. Okay, so my accountant, junior accountant, thought that it is a refund. It's not a refund, it's a discount allowed. The double entry for the discount allowed is discount allowed debit by £500, and cash is credit. And that is wrong. It is not discount allowed. It should be recorded in the debtor ledger control account on the debit side, and the payment has gone out. So the cash is okay. So we'll leave the cash as it is. All we have to do is replace this by debtor ledger control account. So my double entry will be debtor ledger control account debit 500, and my discount allowed account will be credit by 500. So you can see earlier discount allowed was debited, Now discount allowed will be credited. The net effect is 0. And the new effect will appear in the debtor ledger control account as £500. Now, if you read the question again, it tells you that the discount was not recorded anywhere, neither in the control accounts, nor in the individual list of balances. Therefore, we need to update both the accounts. So let's update this. And let's update this as well. Discount allowed. Next transaction. Next transaction is a credit balance totaling 1926, a credit balance, and a debit balance of 684 in the creditor ledger. So think carefully. It is telling me that the list of creditors is not updated. So read this. Has not been updated, and that needs to be written in the list of balances. So list of balances means the control account, creditor control account is okay. It's the creditor ledger which is not okay. So let's record it. Let's update it. So because my accountant forgot to record it, I will record it now. 684 omission and the 1926 omission again. We will not update the control account because the question does not tell me that the control account has a problem. Next transaction is there was a casting error in the sales day book. The March 2007 sales had been overcasted. Overcasted means, I have explained that in my previous video, means we have added too much. When we were adding two figures, we wrote a wrong amount. Instead of writing 2 plus 2 is 4, we wrote 2 plus 2 is 14. Right, so this is overcasted. So sales day book, the effect of sales day book goes into the debtor ledger control account. So that means the 30,434, the opening balance, is too much, and it is too much. Therefore, we have to reduce it by 4380. Overcast. So remember that the total goes into the control account, so we will only update the control account but not the individual balances. Next is Wilson Clark Limited was allowed a discount of £40 in January 2007. This was correctly recorded in the control account. That means the control accounts are okay. Debtor ledger control accounts are okay, but posted to the credit of Wilson's account in the creditor ledger. Okay, so the mistake is my accountant, junior accountant, has recorded the 40 on this side. That is a mistake. But remember, I'm the manager. I'm not going to record this here again because the 40 is sitting somewhere in the 26,398. All I need to do is, as a manager, debit the individual account, and because this balance should be appearing in the debtor ledger, therefore I should be recording this balance over here, 40, discount allowed. So that's the effect. So we'll leave the 40 there. This we'll also call it discount allowed. So let me keep the same color. Next transaction. Helen Consultancy agreed to set off £620 owing by them against the sum owing by Jessica Parker. The appropriate transfer from the ledger account to the debit of the appropriate transfer from the ledger account to the debit of Helen Consultancy account in the creditor ledger had been made. There was no further entries in respect of this transaction. So actually, this is an example of contra entry. Please make sure you have watched my previous video on control accounts in which I have explained the contra entries. So we need to record the contra entry, and the contra entry will be in the control accounts 620 and 620 on this side, and we will call it contra with PLCA, and this is contra with DLCA, debtor ledger control account. Well, PLC, I'm going to call it creditor ledger control account, and the debtor ledger control account. So we are cancelling the balance between the two accounts. Next one is a purchase day book. When I read the words purchase day book, that means I need to focus on my creditor ledger control account and the subsidiary ledgers. That's the first thing, but I need to read the full sentence. The purchase day book total in January 2007 of 3685 was carried forward as 3865. So you can see that these two figures in the middle has been switched, and this is called a transposition error. So if I take the difference between these two, it is 180 more. So instead of writing 3685, the accountant recorded 3865, which is more, a bigger figure. So what we need to do is we need to reduce the balance in the control account, because the error is in the purchase day book. So the purchase day book error is transferred into the creditor ledger control account. So we need to reduce it by 180, and we'll call it transposition error. Let me write that clearly. Transposition error, and that is 180. The last one is Orient Airline had been debited with 340 340. In respect of cancelled ticket to Viga, no entries have been made, so 340. So it says Orient Airline. So what is happening is, as I said, Jessica is a travel agent. She buy airline tickets, and she bought one from Orient Airlines. Now she has to pay them, but Orient Airlines cancel that ticket, or maybe they cancel the flight. Therefore, Jessica will not have to pay them anymore. So in the T accounts, she has recorded correctly on the debit side in the individual balances, but not in the control accounts. So that means this is okay. 340 has been recorded in the creditor ledger, but it has not been recorded in the control accounts. Therefore, we will record it over here, 340 Orient. Okay, so we have recorded all the transactions. The last thing we need to do is close these T accounts. So let's draw the lines. And the bigger side of the debtor ledger control account is debit side, 33,500. We will copy the figure again over this side and then work out the carried down balance of 28,500, which will be a brought down of 28,500. This is credit side is bigger, 34640, 34640, and the carried down balance will be 33,500. Brought down will be 33,500. Then going down, let's close the individual accounts. $28,540, $28,540, and the difference is carried down balance 28,500. In the creditor's ledger, the credit side is bigger, which is 33,500, and then the difference is carried down balance of 33,500. Oh, sorry, it is in between lines. It should be 34,224, and the carried down balance is 33,500, and the brought down balance is 33,500. Now if I match the balances against the control accounts, so you can see that the closing balance of debtor ledger control account is 28,500, which is matching with the list of debtors, 28,500. The total of creditor ledger control account is 33,500, which is matching with the individual balances of creditors, which is 33,500. I hope you'll find this video useful. Thank you for watching. Bye.